So Monday morning comes around and I get a bunch of text messages or emails, and people are saying, oh, it's going to be a bad day. And they're basing that a comment on, I guess, obviously the war that broke out over the weekend on Saturday, or I guess early morning Saturday. And, they were looking at the futures markets and the futures markets that come out in the US. They give us an indication how the overall markets will begin trading come Monday morning. And futures markets start off when the Asian markets open up Sunday evening. You kind of get a feel for how those markets are doing, and then those futures markets in the U.S. And they tell us, what's going on, what the sentiment is with respect to being positive or negative. But I think individual investors, they also want to know who is doing these trades, who are making these trades, why are the markets moving even before 9:30 comes, and even when the markets do open, how or who is doing the selling in this case? Because we know Monday morning comes along and we obviously get selling in the market, which, thankfully by midday that selling reversed to buying, and we saw the markets end up relatively flat for Monday. Tuesday, yesterday, we saw markets sell off once again overnight into Tuesday morning. Tuesday morning, we saw markets drop. The Dow, I think, at one point, 1,200 points. The S&P 500 down about 150 points. And the TSX down close to 1,000 points as well, or in around 1,000 points. So who are doing these trades and who has access to these markets? Well, access to the markets, not all of us do. And in fact, very few individuals or firms have access to the futures market. Very few investment firms can trade after 4 p.m. or before 9:30 when the market is available. I think I've heard rumblings that eventually we're going to be able to trade stocks all day long, 24 hours a day. And that hasn't happened as yet, but I wouldn't be surprised if that happens down the road. But in the meantime, it's those individual firms that are able to take positions before the market opens and that they dictate what the futures look like. Obviously, the volumes of these trades are quite small in comparison to the volumes that happen during the regular trading day, which in North America, 9:30 to 4 p.m. So we tend to see market movement there. A lot of clients also, or individual investors also want to know how these markets move so quickly. Market opens up at 9:30 a.m. and boom, market's down 500 points even before anybody could blink. And the answer to that question is maybe not what most people think. It's not individual investors making these sell trades. It's not even investment advisors like myself or mutual funds or hedge funds. Maybe some of the trades are done by mutual fund or hedge funds if they have access to the markets prior to 9:30, or they have access to algorithmic trades or computerized trades, because it is the computers. The computers are the ones putting through these trades, and they do it at an incredible speed based on many different factors, depending on what the price of the market is at, individual stocks is at. They also can do trades based on headlines. And I think that is where we got or received most of our trades over the past few days. Algorithmic trades or programs designed to search for positive or negative, in this case, headlines. And what we saw obviously over the weekend were extremely negative headlines. When a war breaks out, doesn't matter who's winning or who's losing or what the stakes are, a war to the market is negative. And for the most part, because you're going to see a little bit later that for some sectors of the market, a war actually can be positive. But for the general indices, whether it's the S&P 500, the NASDAQ, TSX, a war is negative headline. So let's go to our first chart here, which is on algorithmic trading. So these are the algorithms. These are those individuals that sit atop the Goldman Sachs building in New York. And these are individuals that come out of university or post-secondary schooling with a math degree, and they design these algorithm programs. They set it up so that if something happens in the market, a cascade of cells goes off, or a cascade of buys go off, sell, 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 sell. You see the market go from up 100 to down 100 in a matter of seconds. And that's who is controlling these markets, especially when we have the unpredictability of a war. And you can see here, a lot of factors go into these algorithms, these algorithm trading, data sources. When you have the data, whether it's market data, historical trades, what I refer to as news and sentiment, the headlines that we received over the weekend, that the algorithms pick up on that company data or any other data for that matter. It could be data with respect to the dollar, or it could be yields on a 10-year bond from the United States. Then what happens? Obviously, these algorithms, they form a model, and they have graphs, and they have a decision tree and logic. And what does the execution do? Well, as you can see in that little underneath the execution green square, speed, frequency of how long they should trade, or how quick they should trade, and the holding period and the size of the trades, all that goes into these algorithms. And last but not least, the monitoring of the algorithms. What's the objective? What's the function of these trades? Performance versus benchmark. If you make a lot of money very quickly, does an algorithm then, is there an algorithm that goes off that says sell? And if the market keeps going down, maybe the algorithm goes from sell to buy. So the answer to the question, who is doing the selling? When you call your investment advisor and they say, probably the best thing is to do nothing when you wake up on a Monday morning where a war breaks out. And they're telling you that because that's what they believe, that this is just a bit of chaos that happens due to the program trades, the algorithm programs. But eventually, these things iron themselves out over a longer period. And we see that instability. And often I tell investors, let's take a step back. 24-hour rule. Let's not buy. Let's not sell. Nothing has really changed with respect to the companies that we own, with respect to the mutual funds or the bonds or whatever investments you're owning. It's just all that algorithmic trading that is based off of, in this case, headlines. That's what's affecting the market. Our next chart and second chart for this, it's actually not a chart, it's more of a quote. We can put it up. There you have it. How prevalent is automated trading? Estimates suggest that between 60 to 70% of the trades that are being conducted now are done algorithmically, meaning that the vast majority of trades are decided by automated trading systems. These models have enormous potential, enabling firms to capitalize on speed, efficiency, and data processing capacity far beyond human capabilities. And so, someone like me, I just can't press the sell button fast enough for us to actually sell the way what you're seeing, to explain what you're seeing on the markets. Nobody can. And it's not the retail investor. It's not even the mutual fund or the hedge fund person. It's more likely these algorithmic trades programs that are designed to pick up headlines, negative or positive, that are doing these trades. So before you think to yourself, on a day where things are falling quite rapidly and the sentiment is quite negative, before you tell yourself, oh my goodness, everybody is selling, we got to get out, that's not necessarily true. It may be that no one is selling and it's just the computer programs that are doing all the selling because they were designed many, perhaps weeks or months ago, to pick up on certain data, and that is why the market is selling and selling quite rapidly. And you'll always be able to detect when a sell program or a buy program is activated because trades happen very quickly and the market's reaction can go up or down quite a bit in a very short period of time. So yes, algorithmic trades are now a big part of what we see and discuss every day. But again, over the long term, I do believe that things always have a way of settling down and that the average investor, through their investment advisor, can always figure out what to do over the longer term. Just don't be so quick to respond emotionally if you see markets moving rapidly on a Monday morning, as an example.